Hello and welcome to Smartvalues podcast. If you want to know more about us, visit lamronanalysts.com. And if you would like to visit us, invest with us, please do visit smartvalues.co.in. This podcast is for education purposes only and should not be relied on for investment decisions. I'm your host Mamta Saraf and I have with me Mr. Soumitra Sengupta, who is the CEO of Lamron Analysts. Hi,
Hello,
Soumitra.
Mamta.
Shobhitra, many of our listeners are unfamiliar with the term momentum in the context of stock markets. So please help us understand what momentum is.
Right. Market momentum refers to the market phenomenon that results in a broad price trend to sustain itself. Market trends emerge, and this could be both upward or downward direction. Momentum and price trends do not occur all the time in the markets, but it does occur in some stocks most of the time. There are techniques that exist today to identify these trends using what are called technical indicators. Momentum trading or investing involves buying the market when it is rising and selling when it is falling. It is the result of the propensity of investors to herd around specific stocks. However, like everything else in the markets, trends are not guaranteed to last. So instead of buying low and selling high, the essence of momentum investing is to buy high and sell higher.
Okay.
No?
Okay. So the idea is to invest in stocks that have a high momentum, which means that these are stocks that are rising.
Exactly. It means that these are stocks that are rising. So if you are doing momentum investing and if you look at the track record of the experts in momentum trading, you will always find that they buy stocks that are rising and they sell stocks that are falling. So, as I said, instead of the common dictum of buying low and selling high, momentum investing involves buying high and selling higher. This may appear to be counterintuitive, but momentum investing has been used successfully across different types of markets across the world. In fact, for those of you who have studied economics, the famous economist David Ricardo has kept records of using momentum to trade markets more than 200 years ago in London. When you invest in rising stocks, the chances are higher that the stock will be rising rather than falling, and that is the benefit of momentum investing. Mamta?
Okay. But Shobhitra, we are so accustomed to buying things when they are cheap. So what is the problem with that?
Right. Of course. I mean, from very early days, I think we get attuned to this concept of buying things cheap because buying things cheap essentially involves or invokes the concept of value. When you get something cheap, you think that you're getting value. And this is something that is ingrained in us. But when you buy items for consumption, like food items and clothing, it makes sense to buy at the cheapest level possible because items are for consumption. They're not going to last forever. You will buy it and then you will consume it. And therefore, buying it cheap makes sense. However, in the financial markets, this does not necessarily hold. Stocks are not bought for consumption, but for investment. This means that whatever you are buying in order to sell at a future date. So, unlike what we buy for consumption, which are depreciating items, investments have to be necessarily appreciating, or at least we hope they should be appreciating. That is why we buy them. Under these circumstances, it is very difficult to ascertain what is cheap and what is not. And the whole question of what constitutes value is very, very opaque. It is often said that cheap stocks are cheap for a very good reason. It can be equally said that expensive stocks are expensive for a very good reason. The markets are not a place where absolutes are very reliable. The whole edifice is built on relatives and relative relationships. And in that sense, very often Expensive stocks in absolute terms is cheap in relative terms. Mamta?
Okay. Is momentum a prevalent style then? I mean, how common is it in India?
Momentum is very common, as I had the occasion to refer earlier. The famous economist David Ricardo was a momentum trader and investor who maintained detailed journals describing his trading philosophy from 200 years ago. He was very successful and built a fortune trading and investing in the markets. It's fair to say that momentum is something that traders instinctively understand and use. Retail investors can understand momentum because it is very visual and optical. One can see the change in prices of stocks, and very often it is flashed across the newspapers boldly. In India, institutions have been reluctant, well, not in India, I think globally, institutions have been reluctant to speak about momentum, whether they use it or not. Academia has also historically avoided this area because there appears to be no rational cause for momentum. But recently, when I say recently, it's actually about 30 years ago. There have been some changes. It started with a paper published by two professors, Jagdishan and Titwan, which documented the profitability of momentum strategies over the long term. I have given a link to this paper for those of you who are interested below. In India, also, momentum is gaining greater acceptance. The National Stock Exchange now has quite a few momentum indices. And on the back of these indices, many AMCs have launched momentum funds. So, yes, it is becoming more mainstream. Mamta.
Okay. But if we are not required to know the details, of fundamentals of stocks that we invest in, how can we be sure that this momentum works?
Well, what I can say is that the track record is there to see. Momentum investing has been used by investors over decades and even centuries. The reason for persistence of momentum may be perplexing, and academic research has not been able to nail down why this thing happens in mathematical terms. But suffice to say that some of the behavioral anomalies of investors, such as herding instinct and their group behavioral norms, cause momentum to persist. Practitioners have known this for a long, long time and have benefited from it. Academia is coming to terms with it more recently. Mamta?
Okay. There is a perception that momentum works only for small cap stocks. Is that
I know, I know that this is a perception that exists, but it's not grounded in reality. Large cap stocks are equally likely to rally and equally likely to exhibit trend behavior. In India, for example, the recent run up in public sector stocks is a good example of this. There are many large cap stocks among the PSU stocks that have run up greatly on the basis of strong momentum. Mamta?
so? How is momentum investing different from trading?
Well, the difference is about time frames, really. A common misconception about momentum is that it is short term in nature and suitable for day or overnight trading. However, momentum can also be long term in nature. Our software at Smartvalues uses long term momentum to create portfolios. The software is designed to identify and stay with long term trends, and it does. So, a duration of our trades could last as long as 2 to 3 years. And it has all the characteristics of a buy and hold portfolio.
Okay. Momentum sounds like it is high churn. So, will that be suitable for long term investors?
Well, this is another way in which momentum is stereotyped. It is true that the short term momentum strategies have very frequent buys and sells, resulting in a high churn. These strategies are meant for short term traders. However, like I have said earlier, the strategies that we use are based on long term momentum. Our software strategies are designed to identify stocks that are long term in duration. The frequency of trades, including the frequency of rebalancing, is infrequent. The software creates a pouch by selecting stocks on the basis of their momentum profile. It then maintains the pouch using trend following rules, which incorporate the old trading adage of cutting your losses and letting your profits run. As a result, there are some trades with a bit of losses, but the winning trades are chunky and therefore are of a long duration. This has an added benefit in that the profits invariably become long term in nature and thus subject to a lower tax bracket. So yes, even though we use momentum to create our pouches, the nature and purport of the pouches are similar to buy and hold portfolios. The number of trades in a year is rarely more than five or six, and therefore the churn is low. So not only are the pouches suitable for long-term investors, they have been created for long-term investors. Mamta?
Okay. So, what in your view are the biggest benefits of momentum investing?
Well, momentum is one of the factors that is credited with accounting for stock returns, the others being value, size, quality, and volatility. Among these factors, momentum appears to have a better return profile than other factors. As I have said, the National Stock Exchange has recently put out some strategy indices such as momentum, value, volatility, and quality. Of these, momentum generally is among the top performing strategies. Momentum investing gives the subscribers exposed to secular market trends. These trends do not stay with the same stock or the sectors, but rotate. Momentum investing is an efficient way to ferret out these trends and benefit from them.
Okay.
Momentum investing also benefits from market volatility as if it is executed properly. It can help you to avoid downtrends and benefit from uptrends. It is also a great diversification tool as allocation to momentum strategies can be used in conjunction with more traditional investments to better a subscriber's risk return profile. Mamta?
Okay. Thank you. Thank you so much for those insights, Shaumitro. I'm sure our readers would be uh, happy to hear, to learn about momentum investing because this is a subject which is, the talk among investors, I guess, who want to invest. And I'm sure this will be a very good insight to their understanding of the same.
Thank you, Mamta. Thank you for having me. And yes, you're right. Momentum is gaining traction, as is indicated by the fact that institutions are now setting up funds and so on. It is a useful tool and technique to know, and I think investors who take advantage of momentum investing or trading uh, will see a reflection of it in their investment portfolios. Thank you, Mamta.
Thank you so much. Bye bye.